Welcome to the future of high-stakes business, where data is the new goldmine powering the American economy. We are talking about a massive shift as companies realize their internal metrics are more valuable than their actual products. The market for data is projected to hit $7 billion by 2034, but the real story is how businesses from e-commerce to finance are turning information into pure profit right now.
Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Next up, we are looking at a major power play from Solidion Technology as they enter a binding strategic patent monetization agreement with Hilco Global. This is a massive move to unlock the value of their foundational energy portfolio, which is currently being utilized by industry leaders across the global battery market. With stakes potentially exceeding $750 million, this deal could change the landscape for every major player in the energy storage sector. Then there is the strategic pivot taking place at Fluor as they shift toward reimbursable, lower volatility contracts to stabilize their future. Investors are watching closely to see if this change, combined with their massive share repurchase program, can finally move the needle on their earnings. It is a high-stakes bet on operational execution that could reshape the outlook for the entire company in the coming years. Finally, we are tracking a fascinating development at Datametrex as their subsidiary Paymeterx explores the intersection of payment patents and post-quantum security. They are currently reviewing their IP portfolio to see if it holds the keys to next-generation encryption, marking an ambitious step into the future of secure transactions. Stay ahead of the curve and hit that like button, subscribe to the channel, and ring the bell so you never miss an update. What if I told you that the most valuable asset your business owns isn't your inventory, your storefront, or even your brand? It's the data sitting idle on your servers. Welcome to the new gold rush. Data monetization. Across the United States, companies are quietly pivoting from simply collecting data to turning it into a massive, recurring revenue stream. Think about a mid-sized e-commerce shop. They realized their customer behavior insights were actually worth more than the products they were shipping. By cleaning up that data and offering it to partners, they created a cash flow that required zero extra inventory. That's the power of monetizing what you already have. So how are the pros doing it? It usually falls into three lanes. First, there's direct monetization, where you bundle and sell insights, like a retailer selling trend reports to a national brand. Then, there's indirect monetization, using your own data to optimize your pricing power or improve retention, essentially turning your business into a more efficient machine. Finally, there's the data-as-a-business model, where companies launch entirely new data-driven services, like a bank offering a high-end analytics dashboard to its clients. We are seeing a shift where every company is, in effect, becoming a tech company. But here is the reality check. This isn't a plug-and-play solution. Success requires a lethal combination of strategy and absolute user trust. If you're a business owner, start asking yourself, what information do I have that someone else would pay to know? If you're an investor, look for companies that aren't just sitting on their data, but are actively weaponizing it to build moats around their business. Experts predict the market will balloon to over $7 billion by 2034, but honestly, that number feels conservative. The real value isn't just in selling bytes. It's in the competitive edge gained when you let data drive your every decision. If you found this breakdown useful, hit that like button and subscribe for more deep dives into the trends shaping our economy. In a world drowning in information, the only businesses that will survive are the ones that learn how to turn that noise into gold. Are you ready to start mining yours? Ever wondered who actually owns the blueprints to the tech powering our future? Well, Solidion Technology just dropped a bombshell that might send shockwaves through the entire battery industry. They've officially signed a binding deal with the powerhouse firm Hilco Global to monetize their massive patent portfolio, and the numbers are staggering. We are talking about a seat at the table in a global market worth a cool $150 billion. Here is why this matters. Hilco hasn't just looked at these patents. They've scrutinized them and found that industry giants, household names you likely use every single day, are likely utilizing Solidion's foundational tech without paying the piper. From electric vehicles and aerospace to semiconductors and consumer electronics, the overlap is everywhere. Solidion CEO James Winters didn't mince words, noting that these aren't small startups but massive industry leaders who have built their entire business models on what is essentially Solidion's intellectual property. When you hear a valuation estimate floating around the $750 million mark, you realize this isn't just about collecting royalties. It's about a massive correction in how the industry values innovation. Hilco's experts are already eyeing the portfolio's graphene and battery tech, signaling that a major wave of licensing demands is on the horizon. Is this a genius power move for Solidion, or the beginning of a messy legal saga that could disrupt the supply chains we rely on? Hit that subscribe button to keep up with the story as it unfolds. Because in the race to power the future, the real value isn't just in the battery. It's in the patent that makes the battery possible. Ever wonder if the real fortune in the AI revolution is hidden in the shadows of the construction giants instead of the glitzy chip makers? Today, we are turning our gaze toward Fluor Corporation. If you are looking to own Fluor right now, you are essentially betting on a transformation, a pivot toward reimbursable, lower volatility contracts that the company hopes will finally stabilize its earnings. But let's be real. This is a turnaround story that is still fighting through legacy baggage. Fluor is aggressively moving to sharpen its backlog quality, and they are putting their money where their mouth is. With share repurchase authorizations expanded to 96 million shares and billions already poured into buybacks, the company is trying to signal that they are ready for a more predictable future. They are betting big on the growth of data centers, nuclear energy, and rare earths, banking on the idea that these will be the proof points that finally flip the narrative. Now, here is the friction point. While the vision is compelling, the reality of project delays and negative operating cash flow remains the ghost in the machine. We are looking at a forecast that targets nearly $19 billion in revenue and over $460 million in earnings by 2029. Depending on who you ask, that could mean an upside of 12%, or, if the skeptics are right, the stock could be overvalued by as much as 30%. It all boils down to one simple question. Do you trust the pivot, or is the execution risk still too high to ignore? If you have a strong take on whether Fluor can navigate these headwinds, or if you see a different path for the company, I want to hear it in the comments below. Remember, the herd usually misses the biggest moves, so trust your analysis. If you found this breakdown useful, hit that like button and subscribe for more deep dives into the stocks that matter. What do you think? Is Fluor a smart play for the long haul, or is the risk just not worth the reward? Imagine a world where your credit card data is safe from today's hackers, but vulnerable to a supercomputer that hasn't even been fully built yet. That is the threat of quantum computing, and today, we are looking at how Datametrex is positioning itself to stay ahead of the curve. Datametrex just dropped an interesting update regarding its subsidiary, Paymetrex. They are pivoting their patent monetization strategy to specifically explore the world of quantum-resilient encryption. In plain English, they are digging through their existing pile of patents to see if they hold the keys to protecting digital payments against the inevitable rise of quantum-based cyberattacks. Now, before you go betting the house, let's be clear. This is strictly exploratory. Paymetrex has been very transparent that nothing in their current portfolio has been validated or commercialized for post-quantum use yet. They aren't selling quantum shields today. They are essentially doing an audit to see if the tools they already own can be repurposed for the security challenges of tomorrow. It is a smart, calculated move, trying to wring value out of existing intellectual property by matching it with the most cutting-edge tech trends. Beyond just the encryption, they are looking at how their tech can optimize resource utilization in private cloud environments, basically helping CPU and GPU resources work harder and smarter. When you combine that kind of infrastructure efficiency with a future-proof security layer, you can see why CEO Paul Haber is optimistic about their role in next-gen payment architectures. But let's keep things grounded. This is early-stage strategy, not a signed contract. While it is exciting to see a company like Datametrex proactively looking at post-quantum frameworks, it is a reminder that in the tech world, the gap between having a patent and having a revolutionary product can be vast. What do you think? Is this just a clever way to rebrand existing assets, or is Datametrex onto something that could secure the future of digital finance? Drop a comment below and let me know your take. If you want to keep up with how these tech pivots actually play out, make sure to hit that subscribe button. The future of encryption is coming. Will we be ready, or are we just watching the clock?